Hello my friend, welcome to Smart Trader Channels. I'm Trace. If you are new to my channel, please consider to subscribe. In this video, I'm going to show you the trading strategies using MACD Supertrend and 200 EMA. You can check the setting in the description below. This trading strategies is very simple. I will explain the concept behind the strategies for you. Okay, and I will give the buy example first. When price above the 200 EMA, the market in the uptrend, so we focus on buy. And we identify the market in the downtrend or mean corrections in the uptrend. How can we identify the corrections? We use the supertrend. The supertrend in red mean the market is a correction phase, and we will combine the MACD cross, right? MACD cross from the blue line cross the yellow line to signal a downtrend likely to end, or mean the downtrend change the phase from the downtrend to the trading range. Trading range mean transitions, and I will identify a trading range, wait for the price breakout by trading range, retest, and here is entry for long. We long from the price breakout of the trading range, risk and rewards at least 1-to-1. Okay, and you need to identify a trading range because it means a transition phase. When you can not identify the transition phase, so you skip the trade. Now watch the market bring the candles. As you can see, the market breakout of the trading range. The market breakout of the trading range. So my plan is wait for the market retest, entry from the range high. Here, stop loss below the range low, risk and rewards at least 1-to-1. Okay, now the trade trigger. We are in profit. So as you can see, we use the supertrend red. We use the market context, the MACD cross, to predict, identify a green. A green means the supertrend in the signal an uptrend. So we don't buy when the supertrend signal an uptrend. As you can see here, if we buy when the supertrend signal an uptrend, we will lose many trade. If you don't believe me, check this on the chart. When you see in the high side, the market may bring a lot of good trade, but when you trade real money, real account, you absolutely lose money because you trade in the lag signal. Now we win the trade. Okay, now let's the market give us another signal. As you can see here, the market now in the downtrend, the supertrend in red, and we will wait for the supertrend transitions into a trading range. Define the trading range, wait for the market breakout of the trading range, and also define a MACD signal. I hope you can see the trading range on the chart. the trading range defined by this range high and this range low. Okay, you can check the MACD signal. The price make equal low, but the MACD make higher low. So this is signals the market. The seller don't want to sell lower. This is the oversold market. We wait for the market transitions into the trading range like I did. So my plan now is wait for the price breakout of the trading range, retest, entry here. Why I don't wait for the market breakdown, retest, sell? Because the price now above the 200 EMA. Price now trade between the two range. Okay, as you can see here, the breakout bar, the good breakout bar and retest of the range high. Our long signal trigger risk and rewards at least 1 to 1. Okay, we want the trade. If you want to hold the trade, if you are confident to hold the trade, I recommend you to move the stop loss to the break even when the price retests the entry here. The one more time, the second time, retest and move up. So I suggest you to move the stop loss to the break even and hold a trade as long as you want. For sell trade is the opposite of the buy trade. Price below the 200 EMA, the Supertrend signal a market up, as you can see here, and I will identify or wait for the market go into the trading range. This means the transition phase from the uptrend to downtrend. So I want to trade in line with the 200 EMA signal. You can also use the MACD signal when the blue line crosses the yellow line to identify a range high or low. So maybe there is a trading range. Okay, wait for the market. Markets now trades between the two trading range. Now market break out of the trading range. My plans is to see the market retest the range low and entry sell. Stop loss above recent swing high. This is the logical stop loss. Now buy retest. Short here, stop loss above, risk and rewards at least 1 to 1. So wait for the market. The market running. We are in profit. We are in profit now. As you can see here, when the market retests the entry the second time and move in profit, you can move the stop loss to break evens and hold the trade. Okay, we want the trade. Very simple and very effective. Please study the market always identify a trading range, because trading range is a transition phase for you to start a plant a trade before the trade is going. Remember, only risk 1 or 2% per trade. Study and backtest before using real money. If you have any questions, please comment below. I will explain better. If you enjoyed this video, please subscribe. Good luck and good trading.